Today, we will talk about fiscal year and its advantages over a calendar year. A fiscal year is a one-year period that companies and governments use for financial reporting and budgeting. It doesn't always line up with the regular calendar year. For example, universities often begin and end their fiscal years according to the school year. Knowing a company's fiscal year is important to corporations and their investors because it allows them to accurately measure revenue and earnings year over year. The U.S. federal government's fiscal year runs from October 1st to September 30th. Fiscal years are referenced by their end date or year, and can even consist of 52 to 53-week periods. Many entities outside of the government also use fiscal years rather than a calendar year. The default IRS system is based on the calendar year, so fiscal year taxpayers have different deadlines for filing certain forms and making payments. For example, a business observing a fiscal year from June 1st to May 31st must submit its tax return by September 15th. Eligible businesses can adopt a fiscal year for tax reporting purposes simply by submitting their first income tax return observing that fiscal year. Not necessarily. A fiscal year spans 12 months and corresponds with a company's financial reporting periods. Sometimes, a fiscal year may differ from a calendar year. Fiscal years are an important concern for accounting purposes because they are involved in federal tax filings, budgeting, and financial statements. For companies that operate on a seasonal basis, using a fiscal year may be beneficial. This is because it may provide a more accurate reflection of the company's operations, allowing for revenues and expenses to better align. Fiscal years are an important concern for accounting purposes because they are involved in federal tax filings, budgeting, and financial statements. Here are 3 key takeaways. 1. A fiscal year is a 12-month period chosen by a company to report its financial information. 2. Financial reports, external audits, and federal tax filings are based on a company's fiscal year. 3. Companies may choose to report their financial information on a non-calendar fiscal year based on the specific nature and revenue cycle of their business. Hope this would help. Thanks for watching.